Okay, so here we go. This is the weekend Tortoise report review for March 15th, 2015. If I sound a little hoarse tonight, it's just finished a 20-hour national e-license workshop for soccer coaches, and was out on the field all weekend yelling instructions to 10 and 11-year-olds under the watchful eye of the U.S. Youth Soccer Director of Coaching for the national license, and so I got that completed, and feel pretty good about it. All part of my effort to raise the quality of our coaching and our soccer club here in town. So one step at a time. I was reminded that I'm no longer 20 years old anymore as I'm stumping around on the field trying to chase these kids down, these meddling kids. Okay, so here we go. All right, so the market is in bullish normal conditions on an annual basis using weekly RSI 14. We're slightly above the midpoint on market condition using weekly RSI 14 at 54 out of 100. On a 10-day basis using the 10-day NDX, we're at 19 out of 100, so that puts us into the red on oversold. So that will trigger a lot of channeling signal setups, and probably some washout, or some overreactions as well. In the market mosaic, the long-term trend, price relative to the 200-day moving average, is back to red bullish at 3.27%. We have only got a little over 1.25% cushion to sideways conditions. The slope of the 50 went negative as red bearish at -0.1. That's not a good thing. ADX is neutral at 20.1, but with bears in charge. The ATR percentage is normal, reading at 0.9. The risk index is the 30-period moving average of the VIX divided by the 10-period. 1.0 is the threshold between risk on and risk off. That reading currently is 1.02, so that still leaves us in risk on. If we take that score of 1.02, compare it to the last 5,000 trading days, and then find the average and standard deviation, that gives us a z-score, or what we call the risk z, at 0.20. This histogram shows a 90-day time series of that indicator, and you can see that we had gotten as high as a z-score of 2, and when it rolled over, we were cautioned to be ready for a change in the swing market condition. I use this indicator really as like a measure of the rate of breathing, steady breathing of the market. When it rolls over, to set natural exhale. Microphone chat. Can anybody? Is anybody not here? I can't ask if you're not hearing me. Is anybody else hearing me? Lisa said she can't hear me. Microphone check. Okay. All right. It must be Lisa. Let me send a chat line to her. Hold on a second, because she can't hear me. All right, I'm gonna drive on. If you'll bear with me just a minute. Okay, so the market rolling over after a z-score move out to +2 standard deviations is a signal to ensure that we are protecting our profits and be ready for pullbacks, and that's what we got. So a pullback, anytime it rolls over more than one SD, from average or the zero line, then that's a time to ensure our stops are in place. Blended monthly rebalancing. You can see there's you can see the current holdings, and then the current leaders here at mid-month, based on the readings as of Friday for these various portfolios. In ETF2, the theoretical exposure in the model gets ramped back to 60% from 90%. The model portfolio itself remains invested at 90%. There was a South Africa was hit during the week. All systems go on the Kansas City workshop. Remember that there's still time to sign up for that in person, and there's the opportunity this year to do distance learning with the conference workbook, DVD, and videos. So you'll hear more about that as we get closer. Okay, now we're looking at the ETF 13 and ETF 32 portfolios using the blended monthly rebalancing lens. We're up to about 50-50 on the cash versus buy. You can see that Japan, small caps, and treasuries at the top. Consumer discretionary still holding up relatively well, but a lot more weakness entering the market. This one, the ETF Max, reflects the leaders, the top 40 or so leaders from among the 1,200 member ETF database. And as you know, I am interested in things like like TAN, T-A-N, in position 4, that are green on the 3-month and white on the 6-month, meaning that the moving to the outperformance has occurred more recently. It's not long in its business cycle. By the same token, solar energy. So it's the 2 solar energy ETFs. A clean energy ETF. So you can see that there is a sector at play. Then the S&P Small Cap 600 Growth, RZG, is also green and white. Moving on. This next chart is showing the top members of the S&P 500 using that same process. So Urban Outfitters in the 3rd position, Harman International in 14th, First Solar in 26th position, Valero Energy and Coach at 29 and 30 respectively. These are all green on the short term and white or yellow on the long term. This First Solar, FSLR, is certainly one we want to take a look at, going from minus 15% compared to 6 months ago and plus 35% over the last 3 months. That's quite a rocket. So that there may be some additional volatility there that we can exploit. So we'll take a look at that one. Next up is the market health check. And these vertical blue lines represent 10, 20, and 30 days to look back, and 60 days to look back, or the 30 and 60, the big thick blue lines. The horizontal red lines are price levels that were once resistance and are now support. On the way down, they act as price targets. And so this this reversal here at 207, right at the previous support level, would tell us at the weak side, the next target on the downside is 202, followed by about 195, 199.5, excuse me, at the edge of the 200, and then a formal support level here at 198.5. Price is in the yellow zone, meaning that I take my directional cue for intraday trading based on what the market is doing. I do not have a directional bias, which is what I would have if it was up in the green or down in the red. I would have a bias in that direction. But since we're in the yellow zone, I let each day's trade unfold intraday. And see, the dragon had gotten all the way out of the river and then re-entered up in here. That says that good potential for that extraordinary move to be over. It takes an extraordinary move to get the dragon from out of the river so his entire body is out of the river. And then when it rolls over at that point, that's another piece of early warning. It's also where the percent price oscillator rolled over, and when its jaws closed, that says that that leg may be done. Be careful about the downside. So we had a number of indicators giving us that information. Another one I would highlight to you is this one. This black line that I'm highlighting, this sine wave looking thing, is the slope value of the 30-period regression line. You can see that that 30-period regression line right now is this central black line pointing up. So the slope is still above the zero line. The zero line is this dotted line, dotted horizontal line in the middle. The left axis, the left y-axis here, is the slope value of that function. And when it gets to 40, we can say statistically that is a significant upward sloping market these last 30 days. Similarly, minus 0.22 is a strong downward shaping market. And so when we get rollovers like this one here about 11 trading days ago, when it rolls over and starts to decay from a height that was already up around 0.40, that gives us an additional piece of warning. So there's a lot of different pieces of technical analysis that protected us against this last little pull, this last 4 or 5 days of pullback. Looks just like market normal breathing right now, because if this support level here at the edge of the river holds like it should, you know, it'll, in retrospect, if it holds there, that would look like a no-brainer. Right now it's looking hard, but if this holds, then what we would have is 1, 2, 3, 4 lows down here around the 198 price level, and then a significant strong move, and then a pullback to a support level higher than previous support. In other words, finding support here at the bottom of the river, that's going to be a very healthy long-term sign. So that's one of the tells in the market that we'll be looking for. Just other things, you can see the jaws of percent price oscillator opening to the downside. The market is still in overbought condition. I'm sorry, oversold conditions down here in the percent R. So that the fact that it's finding support at the edge of the river still makes this a interesting symbol. While I'm thinking about it, let's take a quick look at that FSLR. Yep, that looks to be pretty interesting. If it can hold here above 60, that's going to be useful. Now you can see that chart. Nice gap up here about 15 days ago. Went to this swing high. You get the RLCO closure. But right now, it seems to be holding support just nicely here at north of 59.20. It's finding support at the edge of the river. The dragon is coming back towards normal. On the downside, you have this RLCO crossover that says the first easy leg is over. And the long-term slope of the 270 regression line is still down. So you can make an argument for a price returning to 53.50. We're down here to 48.80-ish. just based on technical analysis. But were this to hold here and get higher than 6240, then there's another 10 to 15% move to the upside still available. So that's one that looks to be very interesting in that solar power clean energy sector. But you just notice way back here how the market pinched. Then we get a breakout here around 46 bucks. Never really looked back. Didn't really violate the downside of the southern skin of the dragon or the 30 period. And now we've got the 30 period moving average, the 90 period regression line have both crossed, and the slope of the 270 has started to stabilize. So this has potential for a longer term play. All right, let's get back to our regularly scheduled program. Next up, we're looking at the Etf Regional Report. 4 of the 10 indexes are on cash signals, excuse me. So that puts us at 40% cash, 60% invested. The S&P at 70 is better than the EFA, the rest of the world, which is at 68. So the U.S. has returned to dominance. Inside the U.S., the strength is in small caps, then mid, then tech, then large. The 2 strongest sectors are Japan and Russell small caps. 2 weakest sectors remains Latin America and emerging markets. In the sector spiders, really consumer discretionary is the last best hope for humanity. Healthcare went from green to white, so it's backed off a little bit here. Energy is out of the red and is now up into the yellow once more, and utilities have started to make a little turnaround, have moved up in the yellow as well. World market model up next. See, everything in the U.S. is above average, except small cap and medium cap growth, which are exceptionally above average, along with Japan, India, and the Philippines, and consumer discretion. And the strong dollar is very strong dollar, almost abnormally so. Inside the individual countries, India and Philippines leading the way in Asia. Most everything just slightly above average here in Europe, with the exception of Spain, Austria, and the UK. We've seen more of a recovery in gold than we have in silver. Neither one looking particularly healthy yet. And I want to shift to the daily report next. So we've got channeling and overreactions in a lot of the XL series, including XLP and XLK, along with NASDAQ and the market itself in channeling. We have a number of good setups in channeling and overreaction among the swing trades patterns for the large caps like Cisco, Visa, 3M, Nike, and Boeing. A lot of this looks like pre-punishment for AT&T. AT&T's been very weak, also getting booted from the S&P, or from the Dow Jones Industrials isn't going to help. It's going to be replaced by Apple, so that'll be interesting to see maybe some short-term buying and sell patterns there for the nimble. we've got, where's my, come on. We've got overreaction signal in the Qs, and then channeling rules in the S&P in the Qs. Not unexpected. Excuse me, my mouse keeps locking up on me here. All right, moving on. Next up is the Dow Tactical Summary. You see more than half are already on auto-framer targets, so that's more of like a market condition than individual stock excellence, although there's going to be a lot of good setups in there. Cisco is interesting. It's third in the auto-framer and the MPRC. It's got a 3.5 to 1 reward to risk ratio. It's also a channeling and overreaction. It stabilized on Friday. Even though it lost 1.1%, it's not as bad as other things. And its RSI2 value is 5 in the green, meaning it's like a 2-day washout. So Cisco's going to be on our list of symbols to look at. Interestingly, DuPont, DD, made a multi-time period breakout high. These numbers in the green under the NDX total tells you that the closure at 102 means that it was higher than the previous 10-day high, so that's going to be a good-looking chart, especially after the weakness of the last week to 10 days. So DuPont is interesting for that reason. ETF summary, even more of the 30 are on buy signals for the auto framers, so it's more of like a market condition than, again, individual conditions. Plenty of channeling and overreaction to choose from, and among the top 5 we have 3 out of the top 5 fire on the RSI2 value as well. So Brazil, USO oil, coal, KOL, and energy, XLE. All of these are on the single digits here in RSI2, which has quite often been a symbol for like a short-term washout and quick hit rebound. So we'll look at Cisco when that comes around. Here's some auto framer and RLFF stuff for us to look at. I want to look at Brazil, emerging markets, Cliff. We got to keep looking at Cliff before that thing gets delisted. It has just been absolutely hammered. We're going to look at Microsoft. That's been a play of the day. And then down in the RLFF portion of this table, just want you to notice how extreme some of these value opportunities are playing. I mean, Microsoft is more than 9 ATR values below its long-term price value underneath the RL270. And way out here in the S&P 500, SIAL, whatever that is 28 ATRs below its long-term fair value. As far as percent leaders or relative strength leaders using the RLFF framework, we'd be looking at DuPont, Boeing, Pfizer, Disney, and United Health. DuPont is, 6.43 average true ranges below its, above its long-term fair value, the RL270. So we'll take a look at, just to see what that strength looks like, we'll look at DuPont and Boeing for strength. We'll look at Microsoft Procter & Gamble for weakness, so you can see what that looks like in practice. Okay, I want to shift over now to charts of interest, so let's get that set up. Like a dummy, I was out there on day one this weekend without sunscreen. I forget sometimes how sunburned you can get even in the early spring on cloudy days. I was well lathered up this morning. All right, let's see what we get here. All right, so the first one we want to look at is this FSLR. That's that First Solar. And you can see that's a pretty good looking chart on the short term. If we go back a little bit, you can see that compared to let's see, it's about 6 months back. You can see that it still has some room to go, even though the last 2 to 3 weeks have looked very strong, and we've had everything cross back over the RL270. You can even see the RL270 starting to roll over and go back up. Yeah, so the slope of the 270 was uniformly down, but now we've got the Dragon, the 30, the RL90 has all crossed over. The river itself has turned and rolled up based on this nice move here. Well, we got some coyotes running amok in the backyard. Let me let the dogs out so they can yell at them. They're carefully fenced. Come here, Mo. Come on, outside. Go. Yeah, this time of year we get coyotes starting to hunt, and they start yelling outside, and it drives the dogs nuts. So you can see in FSLR that the river has turned. It's sloping upward. The Dragon is out of the river. The fact that it is held here inside the, at the edge of the river, I take to be a strong vote of confidence. If it can get above 63, then off it goes. Were it to break down below, say 58.75, I would see going down to test the gap, or the gap up at 55.5, and if that fails, closing the gap to 51, and then getting back to fair value around 49.5. That's what the ladder down looks like. The ladder up looks like this: 73. 50 is going to be the price target on the upside. So we have a critical state forming in FSLR, and that is supported by a broad amount of strength in the solar sector. So to confirm that, let's go ahead and take a look at TAN, T-A-N. Let me get this turned off here. And you can see the same kind of function as we saw with FSLR. The turn happened down in here. The RL270 has actually started to roll up. What's troublesome about this, though, is the sector itself starting to disintegrate a little bit. We've got 4 dots on the upside, so I would say a violation below 42 is going to get it back to 40 pretty quick, and then the price target at the Bollinger Band mean at about 39.5 perhaps. So that's not one I would chase. On the upside, though, getting back to test the previous high at 45.50, there's a tactical play that's possible, but this one looks to me like a tip. I would certainly leap at the opportunity to get short on this one. Chasing it long, not so much. although that trade is there as well. Okay, let's take a look at Brazil. I'm going to zoom in a little bit more carefully on this one. I love this one. You can see where we were stalking this one on the short side, the failure at the 270 at the 30-period regression line, and then the collapse downward. This is one where Brazil and Latin America have been so weak for so long that when they break major support levels, they become auto shorts, particularly if they're joined by weakness in the other broad markets. Now, however, when we take a look at this, we can see that we've got really the makings of a darn near a pattern 7 Z trade. You can see the distance from the RL10 all the way up to the RL270. So a return to normal there would certainly find targets at the edge of the dragon, at the north end of the dragon, at the 30 Bollinger Band, top of the Bollinger Band, and then the RL270. So we have a little roller coaster here. Now this is one where if it gets below Friday's low, that's an auto short. I would be willing to trade this going long from about 30.30 and upward. If it opened inside the real body and then went up, I would be willing to take it also at about 29.70, reasoning that it's at least going to get to 30.50 and in this closing of the gap. So if I can get this trade and lock in this profit, I would, and that would give me some money to play with in terms of developing the trade longer. So I like EWZ here as in a critical state. We wanted to look at DuPont. I just noticed today while we're letting DuPont load up here that Free Stock Charts now is offering a premium service for as little as $10 a month, and I may end up, once I investigate that, I may end up going with a Free Stock Chart solution rather than StockCharts.com, just because I find the charts are prettier, they have more indicators, more power in terms of real-time quotes. I just really like the layout. It's very satisfying, much more than Stock Charts. If for nothing else, it's got the moving linear regression lines. All right, so this is DuPont. Looking at DuPont, you wouldn't even know that there had been any kind of pullbacks in this market. So we have a favorable excursion, in the RLFF. This was something like 6 or 7 ATRs north of the 270. So that thing is still chugging upward, and this breakout here from the above the Bollinger Band mean and breaking out of the river. The 30 has been a successful stop loss there all the way up. And I think you can add to this or buy it for the first time as it keeps making new highs. So that's what some strength one of the strong sectors or symbols looks like. We also want to look at Boeing, BA. That had some power as well. This is so that DuPont is one that's found by the RLFF framework. So now we'll look at Boeing. Boeing's still relatively strong, has not the same level of strength as DuPont, but it's held up pretty nicely. It's all the way back to its Bollinger Band mean. If it can hold support there and take off above the dragon, I like it there. It's still got a nice cushion, a $12 or $13 cushion above its long-term fair value, which is that purple-looking 270 period regression line. If it breaks below 150, however, So in other words, if these support levels fail, come on, mouse. My mouse is locking up again. There we go. Trying to get that mouse to cooperate. We may have to end this soon. It's starting to freeze up more. Darn it, come on. There we go. Yeah, so if it holds here above this this support level, then we can make the case for the long sign. But again, failure below that, like if it gets below 150, that one to me is that one is shortable. If it falls below 150 here, and then my targets are down here. I would just take that as a Z pattern, with the idea that it's coming back to the RL 270. This 148 looks like a lot of volume was transacted at 148, so we want to be sensitive to that. Okay, the mouse is acting crazy here. It's walking up on me, so I propose to wind it up here. We're 40 minutes into this. I'd like to get it produced and hung up on YouTube for you. So there are plenty of targets to look for. You saw over half the Dow and half the ETF 30 are on excellent signals of multiple types. There's a lot of critical states out there, so you're going to see if the market fails here, Brazil and Latin America are where we look to really pile on the downside, and the VIX is going to be well postured there to help us. So that's you don't need a lot more targets than that to handle any downward market. On the upside, surprisingly, it's U.S. small caps are looking good, and to a lesser extent, technology. There's even room for the VIX to grow based on its pullback here in XIV. So those are the main ideas heading into tomorrow. And you guys keep your risk measured and your powder dry. I'm going to be shifting my attention to get ready for the next workshop out here in Raleigh, starting Friday through Tuesday. So we're going to have some, I think, quality live trading in the day room, in the chat room on Monday and Tuesday of next week. We'll try to get as much work done inside the chat room as we can. So this should be a good session. A lot of good people coming, a lot of super traders. So this is Ken from Tortoise Capital. Keep your risk measured powder dry. Take good care, and we will see you in Raleigh or in the chat room, whichever comes first. Take good care. Oh, you're very welcome, Mary. Hopefully you enjoyed it. I'm glad to have you aboard. Mary, are you by any chance are you joining us in Raleigh? Oh, maybe we'll get you out here in Kansas City. Anyway, thanks for attending. Take good care, guys, and we'll see you in the chat room. I'll have this posted at YouTube here in about an hour.